Brett Rice, Core Vision Financial Group. Another video in our series of financial topics as today we'll talk to Bill Robertson about annuities and how they can fit in somebody's portfolio and how they can be used as tools, as a financial tool in one way or another. Prior to being in the industry, my only experience with annuities, for the most part, is understanding they had a pretty bad name and a bad rap, as far as most people say, oh, well, they're expensive and they don't work and all of these things. Well, today what we're hoping to do is we're going to have a conversation with Bill, and we're going to talk through some of those and figure out, why do people say, they're, not for everyone and they're expensive and all of these things. So we're going to, talk about, the transparency of an annuity and why it is all those things. So I'm going to introduce Bill now. Bill Robertson's a financial advisor with Core Vision Financial Group. Bill joined us about a year ago under the Core Vision umbrella. Bill's based out of an office in Bargersville.
Yes, that's right.
And so he's over here in Shelbyville today, and we're going to talk about what we got going on with annuities and how we can fit them in. So Bill, why don't you take a few minutes to introduce yourself, talk about your experience in the industry and what you've got going on.
Thanks, Brett. My name is Bill Robertson, and I've been a financial advisor really on the south side of Indianapolis, the Center Grove, Greenwood, Bargersville area for 23 years now. I've had an office downtown on Monument Circle, had an office in Old Town Greenwood, and right now currently our office is in Bargersville, serving mostly families from that area and small business owners, although we do have some clients who have retired to some of our warm weather states like Florida, California, Arizona, Texas, I think the Carolinas as well, and then a couple of other clients spread throughout the Midwest who have moved for one reason or another. We've maintained long-term relationships with our clients, and I've been doing this type of work for 23 years. I really enjoy helping people. People come to us with a variety of challenges. Sometimes, and we're going to talk about annuities today, sometimes those challenges include retirement income planning. Sometimes those challenges include extended care risks or other risks that clients often face when they get to the point of where they're going to start distributing what they've saved and accumulated for their golden years.
It's a great intro. So I'm going to ask this because I don't know. How'd you get into financial services?
So I worked for AT&T when I was a young man, going to college at IUPUI full-time. Was fortunate enough to get a great job at AT&T, get my foot in the door with a company that provided fantastic training and a foundation for how to be a professional. So I ended up selling telephone systems for AT&T to small businesses, and I did that for about 10 years. But in the middle of my career with them, and as I was finishing my degree work up at IUPUI, my mother passed away, and she had been the primary caregiver as far as financial matters for my grandparents, who were Depression era folks, and so I ended up having to take over those responsibilities, helping my grandparents with everything from CDs to Medicare to anything to do with their financial and medical lives. So I learned a lot about financial services firsthand and how it affected people that I cared deeply about. And I thought, you know what, I really enjoy this type of work and the challenges that come along with it. So I explored getting into the financial advising and the investment business.
All right, Bill, so let's go ahead and dive right into annuities. So when we start talking about annuities, let's talk about what is an annuity.
So in its simplest term, an annuity is a contract, an investment contract with an insurance company. And there are a variety of annuities. just as there'd be a variety of other securities when you're talking about equities or stocks or bonds.
How is that? How does that fit into a lot of people's portfolios when you're talking to somebody about using an annuity and how it can fit in there and where its places in someone's portfolio? Like, where do you start? How do how does that conversation go, and how do you start deciding? Because there are numbers of different types of annuities.
Sure, Brett. I think the way our practice is designed is with holistic financial planning. We want to look at the end in mind, meaning what are our clients' goals, what are their values, what are we trying to accomplish, and then from that, an experienced financial advisor should be able to use a variety of tools to help accomplish helping the client reach their goals in an efficient or an optimal manner. And sometimes annuities are a perfect fit for that type of strategy that we're trying to implement to help a client with their, like I said, retirement income planning. Maybe it's using one of the benefits like a death benefit, or using some indexing strategies that have no cost and still giving clients exposure to the markets with tremendous upside growth availability, and with a hedge or some downside protection that they just can't get anywhere else without using the insurance companies and some of these contracts that are available. So I think it's very critical that you look past the headlines as a client and a financial advisor, and you do your homework, and you make sure you work with a reputable professional, someone that has experience, who can help you decide whether or not this is an investment that I want to consider as a client.
Yeah, that's a great way to put that. I think that we shouldn't rule out any potential tool for someone's financial plan until it's been evaluated to their specific situation, right? Because like I said earlier, is a lot of times people talk about, oh, I feel like an annuity. Some people just don't like annuities as a blanket statement. Mm-hmm. And that's financial advisors, that's clients, that's the whole breadth of everyone involved. You'll run across people who say, I don't like annuities. But I think, in the 3 years I've been in the industry now, I've seen situations where literally the only tool that really works is an annuity. It's just something that makes sense in a situation like you talked about. There may just be a specific instance in that situation that says an annuity is the only thing that's going to provide what they're looking for, what the client needs in that situation.
Yeah, I've had again, over 23 years, I've had a number of clients who've shared that sentiment with me, because there are a lot of people in journalism who may have been talking about a specific type of annuity or at a specific point in time, and all of a sudden a client might feel like that's gospel, right?
Yeah.
Well, I'm here to tell you from experience that it actually is beneficial to understand what is it that you don't like about an annuity. So a lot of times a good financial advisor should be asking additional questions to uncover what a client's true objection is. And there have been many times where I've introduced a concept or a strategy, haven't even used the word annuity, and it's the perfect type of fit for a client's challenge or risks that they're facing. And at the end of the conversation, I asked the client, do you know what type of investment we're talking about here? And, we revealed that we're talking about an annuity. And the client's like, wow, I didn't realize annuity could do that, or that it only cost this amount of money and it provides this type of value or this type of protection.
And I think, you touched on something that's pretty important, is that a lot of times somebody will read an article or hear a news story sometime in the past and it becomes gospel. They just, from that moment on, for whatever reason, that tidbit of information sticks with them. And then that's where they plant their flag and they're like, I don't even want to talk about it because I know this or that about it. But you and I know these products evolve all the time. They're always changing, as far as the way they're structured and what's inside of them and all of this stuff. So it's super important, from a financial advisor's perspective, to stay educated on, the types of annuities that are out there and all of the add-ons that they have and the coverage that they provide and all of those things, because they do evolve, because the market changes all the time. And make sure we're educating our clients to that fact, right? Because they may have read that article 10 years ago, and it just doesn't apply anymore.
Yeah, my sole goal is to help my clients. So if we can help our clients and there's a solution that I feel like is going to fit as part of their financial plan, I'm going to introduce that to my client and then let the client decide whether or not they feel like it's a good fit. Ultimately, a client can, choose for themselves, but I'm going to at least guide them, and I'll give clients 2 or 3 choices oftentimes, and just say this is a recommendation for your consideration. So we can look at a couple of different annuities, we can look at managed money, we can look at a variety of solutions to help clients reach their goals. But like I said, sometimes the annuity is absolutely the best fit. If the client still does not want to invest in the annuity, that's fine. We can look at the second best fit for a client.
Right, yeah. Because ultimately I think that's our job, is to help educate them and give them all the tools necessary, right? And then, they make the most informed, best decision for them with our help, right? And I think that's ultimately our goal. We want them to understand, all of the tools that they're being given to manage their retirement funds and their assets, and at the same time be the deciding voice in it, but being an educated voice in that.
That's absolutely correct. Anyone who's been in this business for a number of years realizes that it's a long game, and you cannot really advise and help a client and do what's in the client's best interest with transactions. It really is relationship based for long-term planning. And I just love being able to help see clients reach their goals and a lot of times surpass their goals, and be able to do some additional things with some of their assets that they didn't even realize were possible when we start working with them.
Yeah, no, that's I think would benefit almost everybody that is, wanting financial advice. If every person that was wanting financial advice was able to sit down with somebody whose ultimate goal was to make sure that they met all of their goals, I think, in the end, everybody's going to win in that situation. So it's great to hear, you say that's what you're ultimately trying to do. So, because I think sometimes you hear a lot of bad stories. You don't necessarily hear all the good stories about financial advice out there. You hear the horror stories.
Yeah, I think one thing I'd like to bring up along that point is, and I've had this conversation with many clients, is the fact that an experienced financial advisor brings the experiences that they have and that other clients they've worked with have had, both good and bad. So bringing that store of knowledge and experience to bear on a client's behalf, I think is invaluable, and we can help clients avoid mistakes and make the best decision for them to help them. And sometimes getting back to annuities, when you're using an annuity, addressing risks that clients have maybe no idea that are out there as they start their journey in retirement. First, and probably one of the largest that we look at, is something called longevity risk. People are living longer, they're retiring longer, so they have to make their assets last over a longer time. Another thing that clients sometimes overlook is when you have a spouse and the spouse passes away, you're probably going to lose some income, Social Security income or whatnot. So will the surviving spouse need additional income, and where is that going to come from? An annuity oftentimes can give a client sustained, guaranteed income for their lifetime or for both spouses' lifetimes. Another risk that clients face that annuity can address is something that we call sequence of return risk. If you retire and in the first 3 or 4 years that you're retired, we have a correction or we have a bear market, and you're dependent upon a certain percentage of income from your investment portfolio, and that portfolio declines, but you still need the same amount of money. If you're not using an annuity, you can be in danger of potentially running out of money. And that's not something that you really want to face when you're 70, 80, 90 years old and you don't have a way or a means to make that money back.
Yeah, those are good instances of where you can say, hey, this is where I think an annuity could possibly work in there. We should explore that opportunity, right? You want to make sure, like you said earlier, that when you're walking through somebody's financial plan or educating them or giving them options, is that you really do. You wouldn't automatically rule it out because you haven't evaluated it yet to make sure whether or not it's to fit in there. And so that's something, there are some, specific situations that I've ran across to where you're like, oh my gosh, and I didn't even think about an annuity, but obviously this is what is going to help them reach that goal, in the I'll say the best manner possible, or the totally lost my train of thought.
Well, if I could, there's a great question I ask clients, and it's whether or not they want their retirement income to be protected or unprotected. And annuity provides protected income. If you have a bond portfolio or you have a portfolio of stocks that are paying dividends or CDs, those are what are considered unprotected. And people would say, well, why is a CD unprotected? And so there's a risk that a CD faces, and it's interest rate risk. Just this morning, I had a client call me and say, gosh, my CD that I had just matured at the bank, and I was getting 3.5%, and they went to renew me at 0.1%. So if she needed income from that CD, that's fine. She would only have to deposit about 5 times as much money as she currently had in the bank to replace the income that she had, that she was getting 3.5%, and now she's going to be paid 0.1. Well, oftentimes that's just not a reality, that either the client can't come up with the additional dollars, or it's maybe not the optimal way for her to produce income when there's other solutions out there for clients. Another, some of the evolution of how annuities are designed today, and I use quite a bit, especially since the pandemic started, is a solution called a buffered annuity that the insurance company will hedge and take on 5% to 20% up to 100% of your loss for you. If you invest in a buffered annuity, there's absolutely no cost to the client, and they do cap the amount of gain that you can have on the upside, but there's a variety of solutions that a financial advisor here at Core Vision could share with you that might fit what you're trying to accomplish. And I would just say it makes sense to at least sit with your financial advisor and ask questions, and make sure the financial advisor is patient with you and goes through any question that you want to ask, so you have an understanding of how this solution is going to benefit you and your financial plan. And we make sure we do that here at Core Vision, and that we're completely transparent. And again, our end goal is to continue having a great relationship and a positive client experience for all of our clients.
Yeah, that's great information. When you talk about, you had somebody call you about CDs, a lot of people want to think of CDs as protected, but as you just explained, the market does what the market does, and right now they're not paying anything. You talk about 0.1, and I think that's a pretty common, conversation we're having with people who've traditionally left, a portion of their assets in CDs. They're just like, well, where do we go now that we can't, make what we were making on CDs? So, an additional option, could be an annuity. you've got to evaluate that situation on a case-by-case basis to say, does this work for this person? Does this make sense? As all of that stuff in line. So that's a great instance in the current market. I mean, we're talking about a conversation you had today with today's interest rates in today's market. So that just kind of gives you a little perspective of how it would work, in different markets. And then,
Precisely. Let me share another, just a recent case. A client that I've worked with for the last 23 years. She's in her 80s, and she does not need income from her annuity that she's owned for years. So her situation's changed. She has enough outside assets, more than enough assets, to provide her with income and cash flow. But what she is having happen right now is her husband is facing some extended care needs, not quite nursing home, but they need to have some help in their home. And it may lead to some nursing or extended nursing care, which is very expensive. And we're talking about, if you need memory care in today's day and age, $9,000 a month per person. There are not a lot of portfolios that can withstand that for very long without it decimating someone's or a family's financial plan, especially if they're hoping to leave a legacy for their kids or grandkids. And you get to a certain age where long-term care insurance is just not an option because the insurance company won't underwrite that. But there are certain and specific types of annuities, if structured properly, which can help a client. And this particular client, we were able to set something up so that any dollar amount she withdraws for home health, assisted living, long-term care, comes out of that annuity tax-free. So there's some tax planning and tax advantages where you can structure certain solutions for clients as well. So I just wouldn't overlook any specific type of product because of something you've heard or read about in the past. As you mentioned, Brett, these things change probably on a monthly basis.
Yeah. Great, that's great information. And I think it kind of actually ties it all together, how like what you may have heard, shop talk or read in a newspaper article at one point may not still apply to today's annuity products. As we've discussed, today's market's different than 10 years ago. The market for annuities, the tools, the riders, the add-ons that they have are significantly different today than they've probably ever been in the history of annuities.
Yeah, I think if you combine just the creativity and the evolution of some of these products, along with the evolution of retirement plan, where more of our guaranteed retirement income falls on our shoulders, as opposed to receiving a pension benefit, and then you look at things like longevity and we're living longer. I think that if you're not considering annuities, you're missing an important tool that can help you feel more confident in your financial future.
No problem. I appreciate you fitting me into your very busy schedule to get over here so we can film this. I do appreciate it a lot. Again, Brett Rice, Bill Robertson with Core Vision Financial Group in Shelbyville, Indiana. We're both on social media. Our contact information will be at the end of the video. Again, thank you for watching, and please reach out if you have any questions. Thank you.